Hello, Maverick traders. Welcome out to your market roundup for July 20th. Usually we do these market roundups at the end of the day. Today I'm going to do it during market hours and give a little heads up to what's happening in the markets. And since we're live in the markets, let's actually go live to some charts here and dissect what's happening in the markets together.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
So, I find this to be an interesting dynamic in the markets. If you look at this chart of the S&P 500, I'm not big on indicators. I always consider them secondary, but one of the things that I do have as part of my plan is divergences. I watch for them when you have really strong trends. They just give an indication of when you're really starting to run out of gas. Now, let me back up and say, I'll be the first to admit I thought we had an exhaustion here. Well, we did have an exhaustion signal there. It was right. And I thought we would have more give back than it did. So I'll admit that, I expected a downturn. We got it. I expected a bounce. We got it. But I called for an A, B, C correction. And that clearly did not occur. And this was the deal breaker, right? This is when I knew that I was wrong about my thesis. And I had to bail on that thesis entirely because an ABC correction is 1, 2, 3. I thought we'd give back this last portion of the gain and then kind of consolidate and maybe work our way higher from there or whatever. Well, it didn't occur. We jumped up right there. And so I had to make adjustments. I had to exit some positions, like when we pull back here. Like I said last week, give credit where credit is due. The market is stronger than what I personally had expected, so I no longer bet against it and so on. I had to kind of lick my wounds if I had some losses or whatever and adjust accordingly. And the ability to not stay with a bad thesis is important, right? I had the wrong thesis and it proved it right then and there. And so I had to move out of that, get back to bullish, yada, yada, yada. So now fast forward a couple more weeks and the market's marched higher. We finally have, though, the divergences, which is, it just hasn't been true previously. In fact, really the RSI went to higher highs every step of the way. The MACD went to higher highs every step of the way. So this exhaustion signal, it really wasn't confirmed with other factors, right? The price got a little exhausted and it corrected and it went sideways for a few weeks. So prices did get a little exhausted that way. But there wasn't really any sort of major reversal signal or anything to that greater extent. Now, markets have continued to march higher, but look at what's happened within the indicators. Clear divergences. See how MACD is at lower highs, RSI is at lower highs, price is at much higher highs, 100 points higher in the S&P, and we're making a lower RSI and a lower MACD. That is what we call bearish divergences. So now you've got to be, and this doesn't mean that you rush out and you short everything. This doesn't mean that markets collapse tomorrow or today or anything of the sorts. It simply means, hey, we're not as strong. We've lost power, momentum. It's sort of, we're running out of gas. And we need a bigger breather. That could be in the form of, again, price can correct down, or you can have a time correction where we march sideways, and either might occur. But similar to how I felt back here, I feel again. Now, I would say I wasn't entirely wrong here. We were exhausted and we went sideways for a while, but I was wrong on maybe the more important aspect of I had targeted a little deeper pullback and it didn't do that. I got some part of it wrong. Here I would expect the same thing, just kind of at least some sort of stalling out of price action. Whether we march sideways or whether we have a deeper correction, I'm unsure. But that's what I'm seeing in the broader markets. And if you look at the NASDAQ, it's the same thing. It's really finally hitting those divergences where you have true lack of momentum that way. So if we come over to our annotate button as price has gone, well, let's look back here as price was marching higher, so were the indicators. So that's confirmation. That's saying, hey, we still got it. We've got the momentum and so on. Now price has marched higher. The indicators have definitely not making new highs.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top right, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and proprietary trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
The NASDAQ, the QQQ, looks worse than the S&P and looks more tired. And by the way, it got overbought. What do we say when you first get overbought? It's like you move into overdrive. People think of that as a sell signal, and it's not a sell signal. It's a buy signal. When you first get overbought, you go into overdrive, and sure enough, it exploded higher as you would expect. But when you've been overbought for a long series of time and you start to get divergences, then it gets dicey. This thing has really lived in an overbought condition the last few months, and now you have quite clear bearish divergences. So I take it for what it's worth. Look at it in your own situation. Analyze your own positions, but that's what I'm seeing, and I take these signals pretty seriously, and so I don't think that you target a mass move lower as if there's some sort of crash or something, but at least expect some back and fill, at least expect some consolidation, some things of that sort. Hope you found this market roundup helpful live in the markets here today. A little bit different than the usual market roundup, but we thought we'd mix it up today and have fun doing so. Have a great rest of your day, and we will see you next time. Goodbye, everyone.